How do you look at it?
So the way we look at it is you've got to kind of step away from the impeachment issue and just kind of look at what's going on, right? So the economy is still sluggish. PMIs still show some, softening in the U.S. economy. You've got consumer confidence also taking a little bit of a hit. Small business confidence also is taking a little bit of a hit. So what we see is the S&P is close to fair value. It's close to its all-time highs. So we prefer to be cautious here. If everything works out in a lot of these areas, there's not a lot of upside. And if some of these issues kind of go awry on you as an investor, there could be quite a bit of downside. So from our standpoint, there's just not a lot of reasons to take risk. So we prefer to be balanced with a little bit of caution in higher beta areas such as small cap equities. And then we also don't like credit. High yield is an unfavorably rated asset for us.
And you were already sort of transitioning into that before any of the impeachment stuff came out. And that is, what would change that view? What would be a catalyst for you to want to take on more risk?
Sure. For us, it would have to go back to fundamentals, right? It's got to be something that gets the S&P going up for the right reasons, right? So a lot of that would have to do with earnings. We'd need the trade issue resolved. We'd need, probably some political certainty, and that might not appear until next year once we find out who the Democratic candidate is. 3, we would need the global economy to start to rebound. Europe still remains very weak. China's continuing to slow. So there's a lot of things that need to kind of fall into the right places for earnings to kind of come back and for the S&P to probably meaningfully push higher. And so from that standpoint, we continue to see it as, steady as she goes, but we're going to take a little bit of risk off the table.